And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, looking at the charts, the news, breaking it all down, giving you guys some analysis from the coaches here at Tackle Trading so you can better run your daily routine. And welcome back here on a Wednesday. It's hump day. Another day where the markets are testing all-time highs. We're in front of this big Fed meeting here in the next couple of days at Jackson Hole. But as of now, we're just kind of drifting higher on the backs of some strong earnings report. Had some other news items happen, like the House passing a budget reconciliation model, at least to start framing a debate around that. That's going to be in the news over the next month or so as those things get ironed out. I got Coach Tyler and Coach Matt here to help me analyze all of it. Let's bring them in right now. Tyler, how you doing today, sir?
Listen, I can't find one thing to complain about in the market right now. So I'm loving life.
Matt, can you find one thing to complain about in the market?
Oh,
I can find a couple.
There's a couple. I mean, it put me on the spot, but I can complain about a lot of things: economically, fundamentally, monetary policy, the entire conversation over tapering. Yeah, I can find a lot of things. You know what I can't? Price action.
Price action, you can't.
Which means Tyler doesn't care about a thing right now because he's.
Listen, I don't know. All that crap you just said, I didn't understand a bit of it.
Yeah.
Chart looks fantastic. Okay.
It does. Chart looks great.
Charts do look great right now. And obviously we are pushing towards all-time highs. Even small caps have bounced up off that 200 period moving average, testing a potential breakout here. We'll look at all the indexes. Before we do that, though, if you're coming into the channel for the very first time, welcome out to our show. Tackle Trading does this show live every day. The markets are live. We go live 12:30 Eastern. Love to have you subscribe, click the bell, come back and join us. Be a part of #Team Tackle, which is our official hashtag. I'm going to start that conversation here today, guys.
I do got one thing I can complain about. Took me a second.
All right.
China's regulatory concerns within China, but not outside of China. That one's a difficult one to figure out. I can complain about mixed messages out of China.
It's a little confusing what's going on in China right now. There's no
even a technician
about
like Tyler can be a little concerned with the mixed messages out of China.
That is true. And we've talked about this before, but I just think that if they lined the pockets of Chinese regulators with stocks, I don't think this would be happening.
How do we know that's not happening? But that is for a podcast conversation. Go ahead, Tim.
Well, Tyler, you've actually been writing about the FXI here recently. I know some of the price actions caught your attention, and obviously it bounced up off the bottom. We talked about it a little bit, but for me, with the mixed messaging, the confusion, all that kind of stuff, I'm still 1000% just to stay away from me. You know, I know some other people like Kathy Woodmat has dipped their toes in there. Those bottom fishers, they're a little bit braver than me trying to catch a long-term falling knife. So
yeah, I certainly agree with that from a long-term perspective. But again, I will maintain what I said the other day. There are moments in time where China is preferred from a short-term perspective, but from a long-term perspective, 100% with you.
Yeah. Let's break down these markets, Tyler. Let's start technically just on the indexes if we can. You were on the S&P 500, which is generally where we do start. And obviously tipping an all-time high here. After 5 green bars, Tyler, we now are up near the top end of this little channel range that we've been in. How do you read this technically?
Well, once again, dip buyers have been rewarded for their bravery. At this point, we all want to jump in a time machine, go back 4 days and go to the dip and buy the crap out of it. But you know what? That's what trends do, right? Like, can we be surprised? I don't know. What did the S&P do the last 25 times it dipped? It was bought. It's not a matter of if, it's a matter of when. And in this case, it was quite nice. I seem to remember last week, weren't we all complaining about a Fed meeting, or at least the response to that, a little bit of a shakeup, ended up being a whole lot of nothing. So look, man, it's good. It's bullish. It's impressive. There's this undying bid beneath the surface that just does not want to go away. And look, I'm pleased. I don't know that there's anything else to say. Yes, it's up 5 bars. Could it pause a little bit? Sure. I mean, but like, look at the last time we ripped. It just paused and then kept creeping higher. It's really, really hard not to be bullish here. It's just a matter of, you know, is there a trade? Is there a quality pattern? There are a lot of charts that are up multiple bars in a row. I will admit that it was easier to find interesting patterns a couple of days ago. The longer an upswing goes, the more challenging it becomes to find low risk, high reward setups. But whatever. I mean, if you've got existing positions on, which pretty much everybody should, I couldn't care less if this thing wants to go up 10 more days.
Mm-hmm. Matt, I think it'd be very, very hard for anybody not to be bullish here. I could understand some apprehension in front of the Fed meeting, if that's what you're waiting on. Maybe you see that as a bigger risk to price action potentially or something like that. But this is a bull market and we're tipping all-time highs. What is your read on this market?
Yeah, I certainly agree with you guys. I mean, it's tough not to be bullish here. And you're right, Tyler. It's, it once again drilled the 50-day moving average and once again confirmed and was proven to be a very good buying opportunity. However, whenever we do test those things, it's always psychologically challenging in the moment. It is. And the next time it does this, it will be very psychologically challenging because of the headlines that are accompanying some of these sell-offs. More than not the technicals, it's the headlines that you always hear. Doom, 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 doom. The market might correct 10%. The market might correct 20%. This hypothetical scenario might play out. It becomes psychologically challenging when you see those types of dips. And whereas back in the day, and again, back in the day simply references how old we are at this point, but back in the day, these types of dips would go over a 2-week time period and it'd be a very constructive downward movement in price. Now it's pretty quick swings to the downside, accompanying some fairly nasty headlines of the end of the world is happening. And then, so technically it's not challenging. Psychologically, it's extremely challenging in those environments. And so, yeah, once again, dip buyers were proven to be successful, and the technical pattern that we discussed last week coming into this week of the 50-day moving average bounce that has happened now 6 times this year, it played out once again. And after a 4 or 5 day movement after the bounce, yeah, you're going to see a little bit of overextended price action coming into the Fed over the course of the next couple of days. You probably could see a little bit of consolidation after a strong move like that. Kind of a little bit of a wait and see approach. I don't think people are going to be looking to lock in profit ahead of tapering, especially given the fact that everybody and their dog has been talking about tapering for 2 consecutive months. And so it's not going to be a shock to the market, whatever the Fed does. The market is simply waiting on a few key questions regarding tapering, and that's all it is. And so you could see a little bit of hesitation, a little bit of consolidation. But Tyler, I would argue technically that's probably technically how it should behave after 4 or 5 strong days up. So
Yep.
It wouldn't surprise me to see a little bit of consolidation in front of that. Yeah, bullish, and you got to like the recent breakouts, but it's not just the top of the market that's playing. It's not just the blue chips that are playing. There's value hunters that are playing big time right now. And you're seeing, whereas you might be seeing a little bit of overextended at the top of charts, you're starting to see some reversal characteristics on stocks that were beaten up as well. And so while the top of the market starts to consolidate a little bit after these strong moves, because Ty, you're right, it was a little bit more difficult today to find stocks to trigger on, correct?
Yep.
Than it was yesterday, than it was the day before, and then it was the day before that. But what I have been seeing technically, and I'll just give you a couple examples. These are Chinese examples, but I'll give you a couple examples. KC and VNet both posted earnings here today. Both are showing very strong short-term reversal characteristics that are kissing up against some reversal pivot points at $20 in the 50-day moving average on VNet, the 50-day moving average, and $30 on KC. And so you are seeing, the top of the market is strong. There's no doubt. Blue chips are strong, no doubt. Full stop. Just go look at Dick's and see exactly what an amazing earnings report at the top of the market on a big blue chip brick and mortar type stock is. But while that next trade on Dick's plays out, and I can't wait to get into the earnings numbers, there are reversal characteristics that could be interesting. Is the point I wanted to make.
Yeah, and a lot of those reversal characteristics, like you talked about, have been in some Chinese names. Like earlier in the week, JD.com, Pinduoduo. Yeah,
absolutely. Momo, dirty sexy money candidate, but Momo's showing a little bit of reversal characteristics, very similar to KC, very similar to VNet. Now they have posted earnings. Momo has to post earnings, but you are seeing some technically fairly accurate reversal characteristics on some of these stocks that are, pertain to China, number one, but not just Chinese stocks. You're seeing a little bit in the metal mining community as well. So,
Mhm.
so while as the top of the market solidifies itself in the face of tapering conversations, maybe you see some of these reversals in the short term play out.
Well, and I'm seeing this pattern a little bit more across the board. I'm glad you guys are bringing it up. Like, let's flash you a couple more here, Tyler. I just went to all the biggest, largest cap stocks in the market. Which ones performed the best over the last week? Look at Airbnb. Firing off of a reversal, A, B, and B. So you've got those kind of patterns. Look at Caesars, CZR. Out of the casino space, firing off of a reversal. So we're seeing mixed types of analysis in terms of what is performing well here this week. And quite frankly, that's also happening in the small caps, Tyler, which I know you track quite a bit. The IWM, the Russell 2000, has found some support. It's coming up off the bottom. So the S&P, yes, with leadership hitting all-time highs, you still have the strength in the market, but you're getting a little bit different types of participation here this week, Matt. Does that mean anything to you? I mean, do you see that as a healthy sign for the market? What's your read on it?
Oh, it's an extremely healthy sign of the market when the top of the market is stabilizing and the bottom of the market that has not been participating starts to wake up a little bit. Yeah, I do see that as a healthy sign of an overall bullish market. Yes,
Yeah.
But once again, even when you look at IWM, it goes to the same point I was talking about with some of those stocks that are really underperforming the market. IWM, I wouldn't say that. You're just stuck in neutrality. But today you're reclaiming a 50-day moving average that played a significant role over the course of the last month as a resistance. I do think that is technically important as you look to break back up above that resistance channel. And so some of those stocks that we've been talking about, yeah, we gave a couple Chinese examples, but within IWM and those small caps and what we have given the overall vocabulary as the underbelly of the market, it's starting to wake up a little bit.
Absolutely. Tyler, can you flash through all the indexes like I always ask you to do? Just kind of take a look at it technically. Tell me what you see, relative strength, weakness, anything that's grabbing your attention.
Yeah, look, I was just letting you run with that small cap stuff. I mean, that sounded interesting. I just let you talk them up.
I see, and I just tried to tee it up for you.
Listen, so here's the thing. Remember, a week ago, these things were flirting with what could have been a very nasty breakdown. Broke the 200 even for a trading session. This is the Russell futures contract. Not a good look, right? Like psychologically, a little challenging, down 6-7 days in a row. And then just like that, they flip a switch. They're all coming back in. And from a candle perspective, these are bullish candles. I mean, open at the low of the bar, close at the high. Open at the low of the bar, close at the high. Open at the low of the bar, close at the high. Today, a little bit of selling in the morning, but we're at the high. 4 straight bars. Pretty good, man. I'm impressed. Just a complete rejection and reversal of the preceding downswing. I think you got to be impressed. Dare I jinx this and say breakout? Let's do this. Let's get to the upper end of the range. You want to go lower end to upper end in one swing? Like I'm game. Like normally, Matt, I would draw my little Bitcoin shuffle here and do that, but I'm feeling like. No, screw it. I'm feeling
you're going just V-shape. Just go. Just go.
I mean, listen. Yes, Fed. Let's do something this week that'll do it. I don't know. Who knows? But there's no denying the sentiment has shifted. In the short run, things have gotten much better the last few days. And if you wanted one chart to kind of illustrate that, I think that the last 4 bars in the Russell do that. Tell you that that turnaround. So I like it, man. I like it a lot.
And I don't know if this is going to be important, but I do think it's playing a role in my analysis on the Russell 2000. So I'll just lay it out there.
Sure.
The cleanliness of the technical analysis in the last 4 weeks, from the time it held the 50-day moving average to just 4 days ago when it drilled 2100, to the cleanliness of that breakout channel. This chart is getting more clean than it's been in the last 8 months.
Yeah.
In the last 8 months, it is behaving more technically accurate in the last 3 weeks than it has in the last 8 months, and that does get me more interested. I see this as a traditional W reversal, quite frankly.
Well, and one thought that came to mind is I feel like the Russell is like the Fed, okay, and condor traders are like everybody, right? And so anytime the Russell's getting ready to break out, condo traders are like, not yet, don't do it yet. And then the rut's like, oh, okay, we'll go back into the middle. No problem.
See, and I got an analogy for you. The S&P 500 is like the Fed's monetary policy. Go look at the S&P 500. You see that trend.
Yep,
and the Russell 2000 is the American consumer's buying power as the Fed does that.
See, and I got a different analogy for you.
Oh, China's the American buying power?
No, it's simple. My analogy is more about the technicals here. Go to the Russell real quick. The Russell's like a jack in the box, and it's just being wound up very, very tight. Eventually, when that breakout happens, it could absolutely explode. Yes, it's in the range. And I know you condor traders like the neutrality for now, but let's not forget when the Russell breaks out, wants to run, it can absolutely fly. It did it late last fall. It did it in the spring. I know we're currently neutral. It's taken 7 months off here to the 200 period moving average. I'm not calling my shot yet either. It looks like Tyler thinks it's going to go test the high. I see the arrow there, Ty, like you just drew a minute ago. But I think the Russell is something I'm going to be watching for in the fall, maybe to do some leadership if we can catch a breakout sometime.
Maybe. I'm going to go back to the analogy. So I kid. No, I don't. I have commentary. But
about the jack in the box?
Yeah. The longer the base, the higher in space. That was just a trick on that.
That's
no,
right,
it wasn't new. No.
Don't modify the statement. Pretend like it's original, Tim.
There you go. I stole Tyler's line apparently and converted it into a bad jack in the box analogy.
Yes.
Before we move into sectors and commodities, and real quick, Matt, I do have one question for you and you as well, Tyler. Potentially, I did see that the House passed a measure for the $3.5 trillion budget reconciliation. Matt, the market already expects that's going to get some version of that sometime in the fall as the political negotiations go back and forth. Is that a market story at this point? It's my simple question.
I don't believe it is a market story as of right now. And simply put, the $1 trillion bipartisan plan will be voted on by September 28th. I believe most market participants, myself included, has seen that $1 trillion bipartisan plan as a done deal for literally months now. And so, no, I do not believe that it will play a role from a market perspective. There'll be some political, discussions and debate and all that, especially as we get deeper into September. But that $1 trillion deal, it only puts $550 billion over the next 8 years into the market. It's pretty much agreed to from most angles, and so I don't see anything there being a market relevant story unless some cold water gets thrown on it. The $3.5 trillion plan is on the path towards budget reconciliation now after the House passed a procedural vote yesterday. There's still going to be some debate on that, but the debate on that is more between moderate and liberal Democrats, progressive Democrats. So it does look like that is on the path to budget reconciliation. That certainly could be a market story as we start getting into September, but again, the House is now in recess. The Senate is now in recess. We kind of have an understanding of the arguments and the debate on the $3.5 trillion. Republicans widely to everybody do not agree with the $3.5 trillion. Moderate Democrats want to go with the $1 trillion and then handle the $3.5 trillion in a different scenario. Progressive Democrats want to tie the $3.5 trillion to the $1 trillion. That's the debate around the $3.5 trillion. But again, I don't feel this is really a market story until Congress comes back from recess in mid-September.
It's kind of where my head's at as well. It's going to take some time for that to play itself out too. So, all right, just saw the headline, wanted to talk about it for just a second because obviously it was in the news. Let's flash into some of the sectors here next, Tyler, then commodities. I know we got some earnings roundup we got to get to, and then another round of Jedi options here today. I'm excited to see what Tyler has to break down. He's going to look at a couple of stocks that reported earnings today and talk a little bit about what to watch for in the options market. Excited to see that here in a few minutes. Tyler, in the sectors, I want to get your updated read on a couple of different ones. Communications first, obviously a real nice firing off this week. It had kind of moved into a consolidation like you saw there, some pivot relationships that were a little bit messy, but now we're looking towards a breakout. Do you see this as a clean breakout, and how would you read comms right now?
So if somebody asks me clean breakout, interesting, intrigued, you want to play it, I say, I don't know. I mean, let's look at Com's history with breakouts. Spotty. I mean, it's kind of a choppy ETF. And I say that knowing that it just ran from 65 to 85. And I'm still like, you're still choppy, man. You're still choppy. It's okay, Tim. I mean, some of these prior breakouts, they move a couple bars, they chop. I find the setup in XLF coming into this week a little more attractive than this one.
Well, I was going to ask you about XLF as well, and Matt breaks down these sectors every day. So I wanted to get some of your updated reads on them. XLF, we highlighted earlier in the week, it had come down into support. It found that old resistance and it just fired back into resistance. Now, this is 4 days in a row heading into its resistance channel. I mean, what's your read here on XLF? And is there another trade above 39 if you catch a breakout here?
I'm waffling in my head. Do I want to chef's kiss this thing or just slow clap? Like, I don't know. It's gorgeous. This is like perfect. No joke. Like, I don't know that you could have scripted this any better from a technical analysis perspective. XLF, like, well done. I mean, it broke out. It's like, look, I'm breaking out. Hey, I'll give you 5 days of follow through. It's like, oh, you missed me. That's okay. Let me come right back. Timmy. Leo, the latecomer here. I think there was a book about that. Maybe I read it to my kids. You missed me. Okay, well, let me come back and give you a little second shot here. Tell you what, I'll make it easy. I'll come right back like I'm talking to the penny of the old resistance. Just so if you're a little slow on the uptake, you realize, oh yeah, that's the signal. And then I'll trigger, and I ain't going to screw around. I just go straight up for 4 bars. Look, if you can't make money with that cleanliness, I don't know what to tell you. Like, I don't know what to say. This has been gorgeous. I think you got to love the follow through today because the last couple of bars were good, but not great. You're getting acceleration after having gone up 3 days. That's impressive. I like financials here.
Matt, what about you on financials? You've been all over this one on that next opportunity pullback that it gave us, pivoted, hit it. We've been talking about it day by day. Now we're pushing towards another breakout. Do you see that as a new opportunity?
Well, Tyler's absolutely right. I mean, it gave you everything you asked for and everything you wanted, and then it did it. It's if Tyler would have been here to draw his lines, those are the lines Tyler would have drawn from a traditional technical perspective. You see a higher high, it comes back down to the previous known resistance level, cluster of moving averages right there, gives you a nice little slowing momentum candle, pivot confirmation, momentum starts building into the resistance channel. This is very, very clean from a technical perspective. There's no doubt about that.
Yeah, got it. Like it. By the way, just one quick note. I did see when I was going through my daily routine, the casino stocks are all firing off today. We looked at Caesars earlier. Just to look at a couple of these. Tyler, Penn National Gaming, such a hot stock last year, had taken a lot of time off.
Reversal.
Beautiful reversal characteristics, actually.
That was on the options report 2 weeks ago for that specific reversal. Never confirmed. Got confirmation today. The 50-day moving average held 2 days ago. Again, reclaimed it yesterday, broke that technical pattern, and then the momentum today continued. It's impressive.
And I'll pull my best Tyler. I'll do a little crowing right now. Look at DraftKings. I brought up DraftKings on Queen's Court just a couple of weeks ago as reversal characteristics were developing as potential breakout. It is firing off here today. I know there's tons of noise left of the chart. DraftKings not a great swing trading stock, but I loved those characteristics building. Win Casino's looking great. What do you see here on DraftKings, Ty?
Listen, well done with the crowing. I thought that was good, Tim. You did a good job. Look, I am impressed. The challenge for me on DraftKings is just it's a volatile stock. The cleanliness isn't as it makes it a little harder, right? It has required more patience to get paid and have to sit through a little bit of adversity. Look, I celebrate those that are making money the last couple of days. You had to sit through a fair bit of chop last month or so. So good on you. I think the setup in Penn was easier to spot, cleaner. But I mean, look, last 3 days are impressive. And you're right. This is a good example of what we're seeing here. They're coming after casinos. They're coming after some of these reopening plays. What does that say about the sentiment surrounding the Delta variant and some of the concerns that caused us to go down last week? It's like, yeah, never mind, man. We bullish.
Wait till DraftKings gets overextended, starts coming in 2 days, and then you'll see those headlines.
There you go. That's right. That's funny to me. All right, let's keep moving on. Sector roundup, I'm done with, unless you guys got any other sectors you wanted to highlight.
No, energy's up another 1%. I mean, again, it hasn't bounced back as strong as some of the others, but still, that's impressive, right? I mean, if we were talking 4 days ago, this is about as good as you could have asked for.
Yeah. Yep. All right, let's flash through commodities next if we can. You just mentioned energy. Let's go right to crude oil. And obviously, we've had a nice fire back here, Tyler. Where's the next level to watch for? Matt and I were mapping out 2 scenarios. Either it comes back and retest double bottom scenario, or even a little base and then a run. What would you be watching for here technically?
The most bearish scenario would have been old support becoming resistance. The fact that we blasted right through it tells you something about the strength of the bounce, right? So it's almost as if you've upgraded your bearish bias, or it depends on how you're moving the scale, but you're less bearish, right? Like on the initial bounce, you're like, all right, man, you're going to get past 65, then blast through it. I think the next level, I mean, you could say the 20 MA, right? Obviously, if you give significance to the MAs, you're testing that. The prior pivot for me is, let's call it $70. Right? I mean, that was where the last bounce failed and it got whacked. You return to there. That's where supply was last time. I think that's the level that you need to break for the trend structure to change. But I'm impressed by how strong this bounce has been for sure.
Yeah, it's been a nice little bounce here. Obviously, still not out of the woods, still kind of a mess. It's going to take some time, but start watching these candles day by day. All right, gold next here, if we can. Kind of hanging around up here around that 1800 level. We dance above it, we're dancing below it here today, but you got moving average congestion. What you read here on gold's chart?
I don't wish gold miners looked more like gold. Gold doesn't look as bad as I would have thought when I just had this foreboding, ominous feeling when I put in GC. I'm like, I know this thing's crap. I'm like, I don't know. It's not as crap as I thought it would be. But you take a look at gold miners and you're like, guys, you're terrible right now. Just terrible. I don't mind it. I think it's fascinating that this entire like mini crash, we came back right to where it started. Which A, makes you feel bad for the schmuck who got liquidated at 1680, and B, just says something about how quickly the market can correct what it thinks was maybe an overdone move. I don't think we're surprised you're finding a little bit of supply here. It's like a filled gap, right? Once you fill a gap, it could become support resistant. Chopping is fine. I don't think you want to see this take out short-term support levels. That would concern me, 1775. If it wants to chop between there, it's fine.
Gotcha. All right, Bitcoin last, then stock talk. Give me a read on this chart. Let's see where your lines look like.
Yeah, hey, very quickly, just one point on gold. Talked about this a couple days ago as well. I agree with you, Tyler, that when you're looking at the miners right now, they do not look good. But they are at a position from a weekly chart where you're looking at value there. And the longer gold holds its head above those moving averages and above that 1800 zone and starts to show pivot confirmation, it's choppy. It's kind of a nightmare from a technical perspective. But the longer it does show some stability at that 1800 level, you're going to be looking at this opportunity on GDX, in my opinion.
100%. That's a great point. It's a great point. You hate it on the daily, on the weekly. You're like, well, this is the spot I would have been interested. So color me interested. Yeah.
Long term. Yeah.
Yep.
Gotcha. All right. Glad we point that out. Bitcoin last here, Tyler. Do you got to redraw that line?
I do need to redraw that line. So it broke out, right? I mean, followed the little two-step shimmy here, broke out. Look, I was a little optimistic, Timmy. Okay, sue me. I drew the line to 56. Decided to pull back a little bit. Probably because those late bloomers were like, wait. We didn't get the breakouts. I was like, okay, I'll come back. Retest, little retest of old resistance. That's a lovely candle today. I mean, let's see if I'm feeling it. I don't know. I mean, okay, pullback's done, Tim. I like how it held the old resistance.
As a Bitcoin holder and trader, I don't need it to go straight to 56 or 60 or any of that stuff. I like a little meandering back and forth here, building a trend structure. We're testing 50K here, sure, a little bit, but I don't want it to always be running like a madman with his hair lit on fire, right? I want things to kind of chill. I mean, Matt, are you seeing a healthy trend developing like I am? Are you seeing any concern here in the Bitcoin chart?
No, I think it is healthy to come back down and retest that breakout channel and give you a nice little hammer candle flag pattern. It doesn't change the technical, target in that 60K. It's going to have chop. We all know that. And the more you do test and secure, the more confidence is going to build.
Yeah, absolutely. All right, guys, that's it I got from the big pictures part of it. Let's now move into stock talk. And really, the conversation today, Matt, is just around the earnings roundup. We actually have a few important names here that were on the docket here today. I know that, Dick's Sporting Goods was one that grabbed everybody's attention here this morning. Where do you want to start?
Well, we are absolutely going to start with the big box retailer Dick's Sporting Goods here, because they are a juggernaut. I mean, you just got to label them that way. And when they give you a technical pattern, you got to trade it. Just very quickly, when we were analyzing the broad markets earlier, we were talking about that 50-day moving average bounce. We were talking about the psychological challenging environment that those things can lead into. It just reminded me of what Keith King always says. And Keith was on our podcast this previous week. And he said, sometimes you just got to plug your nose and buy. That's the 50-day moving average bounce. But in terms of Dick's, this is a juggernaut here. It just is. It's a fundamental juggernaut. It's a technical darling. It's a darling to the market. And they came out today and they just impressed. Just a very, very impressive earnings report. Dick's comes out at $5.08 a share versus the expectation of $2.80. A massive beat on EPS. Revenue came in hot at $3.3 billion versus the $2.8 expectation. That did result in a 20.7% yearly increase in revenue. But the 20% yearly increase in revenue doesn't really tell the story of their sales numbers over the last 2 years, expanding even over 2019. I mean, just a very impressive year-over-year type reporting out of sales as well as revenue. When you're looking at past numbers, though, because obviously those numbers itself, especially the EPS beat, supports a gap here, right? But you also had two different things announced in their earnings report as well. The first was a special dividend of $5.50. They're making so much money, they're giving it even more to investors. So that was number one. Number two, they doubled their stock buyback program to a minimum of $400 million as well. And so Dick's basically said, we're making more money. We're making Apple money here, guys. We're going to go give some of it back to the investors and also gap up. It's just a darling. Nothing really to say other than just a very, 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 no, let me reiterate. This was the best earnings report I've seen this year.
Well, and that's, quite frankly, I remember the one we did in May where you analyzed it. This is why I love earnings roundup, guys. And I got to tell you,
very quickly, one last point. Guidance. EPS guidance was increased by over 33% from $8 all the way north of $12. Revenue guidance was also up 10%. You cannot find anything bad about this report.
Mm-hmm. Beautiful. It's a wonderful company. It's got to be on everybody's watch list out there. And I love your earnings roundups, Matt, for many different reasons. Number one, it gives us a fundamental update on what these companies are doing that we're trading on our watch list on a regular basis. I remember the May halftime report we had here. We spent quite a bit of time here on Dick's on that gap. And if you're out there and you're a new trader, you don't always get the opportunity to trade on the day of the earnings. Like today, there's no opportunity to trade, in my opinion, unless you're day trading, momentum trading, doing something special, right?
Well, we'll break that down when Jedi Options, when Tyler takes a look at it. But yes, I agree with that.
And then as those patterns develop, then you have the fundamental backdrop of the strength of the earnings report. You're like, okay, I got that much more confidence to pull the trigger on that next signal. So Dick's,
I appreciate that, because that's the intended purpose of earnings roundup, is to give our community an update on the popular stocks that are typically traded by our community.
Yeah, and Dick's, keep it on watch list, guys. It's got to be there. I know Tyler's going to examine the technicals and the condition here in Jedi Options in a few minutes. So let's just move right into the next stock that you got there.
Toll Brothers, another darling of the market, home building company, triggering here today following a positive beat on EPS. They came in at 187 versus the 152 expectation. billion. Revenue came in slightly above the expectation. The expectation was 2.2 billion. They came in at 2.3. That resulted in a 36% increase in revenue year over year. The only drawback here, positive earnings numbers, the only drawback is a slightly, and I mean slightly lowered fourth quarter revenue guidance, but maintained EPS.
Dude, listen, this company is really, really interesting to me. I love home builders in general, the dividend payers. Toll's developing a nice little pattern. I like it. I'm interested. The Q4 drawback I didn't hear about, but they did report a record number of new contracts in this quarter. So some good things happening in the report, Matt. Is that basically the takeaway? Some pretty good things and maybe one or two little grain of salt that we got to think through?
Obviously, if it wasn't for Dick's Juggernaut today, you're probably talking even more about Toll Brothers a little bit, but it just slight beats here. Nothing really.
Gotcha.
Nothing concerning fundamentally on Toll Brothers. What is interesting though, and it's more about the industry than it is the actual stock. I do like the stock trigger too, and the no sell day candle on earnings is always a positive. But XHB is, quietly over the course of the last 3-4 months, just kind of in this sideways consolidation type scenario. You look at that on the daily chart, you got an increasing support pivot on the 20 and the 50-day moving average coming in to a weekly breakout channel right there at $80. I think home builders could be setting up here just in general. Tyler, what's your technical read? Not so much. I know you're going to talk about Toll Brothers in Jedi Options, but just from a sector perspective, home builders, very popular trading companies here, right? Very popular cash flow companies, very popular investing companies, have taken a little bit of a break over the last 3 months. What's your read here on this potential breakout of 80?
Oh, I got a lot of thoughts on this. I mean, the chart's great. I think you could have a broader discussion on how and why stocks are such a good inflation hedge. So here's an example. For those of you that haven't seen a chart of lumber futures, you probably heard about it in the news, right? Lumber prices went bananas during the pandemic. I don't know what the peak was, $1,700, $1,800 per however many square feet of wood they price it. It's come all the way back down, right? So lumber prices have crashed all the way back to where they were pre-pandemic. When you look at building costs, so there for a while, it cost a lot of money to build a house, right? Prices went up. Well, now all of a sudden, lumber's back to where it was pre-pandemic. Have they lowered the price of houses? Commensurate with that? No. That price is sticky. Housing prices are still higher. Who do you think is benefiting from that massive drop in lumber prices over the last 6 months? It ain't you. It's the home builder. They're pocketing that. That just beefed up their margins considerably. They got an excuse and a favorable backdrop to raise housing prices. And their costs just got cut considerably, right? Now, there's a lot of other inputs, but the point is companies have the ability to pass on the increased prices, right? And then if the prices come back down, commodity prices and raw materials and inputs and such, they just increase their profit margin, right? More than, they needed to. So no wonder housing prices or home builders are doing so well. This is just a minor, I think, driver, right? The lumber thing, but maybe just one more reason why this is a good area right now and the stocks are so bubbly.
It's an interesting point, in terms of passing on the cost to the consumer, but the end producer, Matt, the end company doesn't always necessarily take that increased cost away if prices do moderate, at least in the short term. And that's the thing about inflation a little bit, right? Let me think through that a little bit.
Tyler just described some creative accounting at the corporate level regarding PPI report, inflationary data transitioning in the CPI report. Honestly, it just describes some of the problems with our capitalistic system.
It's what's happening right now. Yeah.
But he's not wrong.
But here's the thing, right? Here's the thing, right? They don't limit who can take advantage of that, right?
No.
Apple's not like, screw you guys. You can't buy our shares and participate in the fact that we have this business model that allows us to really benefit from inflation. No. You could buy our shares all you want, right? You can go buy home builders. the beautiful thing about the stock market is it's a level playing field. You
Yep.
can complain about the way that some of this works, or you can say, oh, that is yet another in a long list of reasons why owning stocks is one way of hedging myself against inflation.
He's absolutely 100% correct.
I love the point. Wonderful.
Yeah.
Thank you, Tyler. Any other?
And I didn't
Okay.
even think about how that might impact revenues on the housing sector.
Mm-hmm.
I like this breakout more.
Yeah. By the way, to give you the exact numbers, lumber prices tipped over $1,600 in May. We're down to $500 currently, just below it. So,
Yep.
Yeah, interesting point there, Tyler. Love it. All right, any other earnings stocks there, Matt?
And yeah, in that 6 months, the average cost of housing went up.
Has actually gone up. I just reported that just
Spot
the other day.
prices went down. Average cost of first home buyers is at a record high right now.
Continues to go higher. Mm-hmm.
Well, you're talking a difference. I saw stuff like the average price of a home, like that, like what was the cost differential with wood prices spiking? It's like $30,000 on a typical house, right?
Mm-hmm.
Yeah,
So
it's like 10%.
it's a lot.
It's not a small figure.
Mm-hmm.
And that represents, well, and honestly, it represents a little bit of margin safety for those home builders.
Mm-hmm.
Yeah.
Interesting. That's got me thinking, Tyler.
It's got me noodling one too. Yep.
Yeah.
I like it, Tyler. Yeah, good. Okay. Any other earnings roundup?
No, it was really Toll Brothers and Dicks. I mean, you got CRM, Snow, and Ulta tonight and tomorrow morning. So CRM's the big dog there. There's no doubt about that. Stay with us. Come back with us tomorrow, and I'll break down CRM, Snow, and Ulta tomorrow.
Looking forward to Salesforce's numbers. Obviously, it's one of my favorite companies. But
well, it's finally starting to pick up some steam there.
Chart's looking good. Let's see if they can deliver on an earnings report, Matt. That's going to be an important one. You obviously got to deliver. All right, let's transition into our last segment here today. And loving the conversation here, guys. We're going to now move into Jedi Options. And Coach Tyler is the head coach of Team Phoenix over at Tackle Trading. He also is a writer, a blogger, an educator in the options market for more than a decade now. I've known him for a long time. He does great with this. And all you guys out there who are Team Tackle, you know it as well. It's why we give the Sith Lord, are you Sith Lord or I guess you're a Jedi, Tyler. I don't want to get the canon wrong. I apologize. It's why we give the Jedi a segment called Jedi Options. He can dig into some concept in the options market. Today, he's going to examine these two companies we just looked at post earnings and break it all down. Tyler, what you got for us today?
Yeah. So what we thought would be very instructive, Matt just mentioned Toll Brothers, nice little post earnings move, and Dick's Sporting Good. What I wanted to do was talk through these two charts and help you see what I see and how I, as an options trader, would think about building trades around these patterns, whether I would enter a trade today. If not, what am I looking for? Part of becoming a better trader is viewing the stock market kind of like you're playing chess. Like a good chess player is good because they think so many moves ahead, right? Like when you look at professional like chess masters playing games, the lion's share of what they do is sit there and think, right? Because they're thinking like 50 moves ahead, right? And they have to think about the implications of, if I do this, then he does that, then I'll do this, then he'll do that. And they're very good at this kind of, just mapping out the possibilities. As a trader, you have to tap into that a little bit and be able to say, okay, I don't know if I would buy Dick's right now, but here's what I'd like to see. And it's really hard to do that if you've never paid attention before, or if you've never tried this before. But the more you trade and the more you see patterns evolve and patterns develop, you'll start to discover, oh, this is typically what happens, right? Like if this is the first time I've seen a stock gap up on huge, good earnings and big volume, I'm probably like, I don't know how it plays out. But what if this is the 500th time I've seen a company gap to a new high with really good fundamentals in a bull market? I could probably think back to the other 499 episodes, think, what's usually the ensuing price pattern that gives me a good opportunity, right? So that's where I'm coming at. And one, I think, resource here, Tim, I'm going to put in the chat window. You can share it on YouTube if you want. I wrote an article for the Trading Justice newsletter 8 months ago in January on the definitive guide to option strategy selection. So part of this discussion is, why do I like the chart? Okay, what kind of pattern am I looking for? But the second part then is, well, what kind of option strategy piques my interest here? And if you're curious about, okay, well, what exactly are you looking at? I don't have 45 minutes here, so I'm going to condense this. But if you want more information on what are the metrics that I look at to help build the strategy, like what matters, what made me pick a bull call versus a naked put, you'll find more of that in this particular newsletter. Okay. All right. So, Tim, you interrupt me if you want, but I'm gonna just rock and roll here for a few
No,
minutes.
you definitely rock and roll. I did drop the link to that newsletter just in the chat in case anybody wants to review it. But yeah, definitely keep rocking and roll.
Okay. So with this up move, the challenge. Let's start with this. We're not going bearish. Okay. This is the hardest trade in the world to try to go bearish on Dick's Sporting Goods. It's like that's the opponent you want to pick. That's the fight you want to start. You want to pick the company that Matt just said is the best earnings announcement he's seen all year. That's the guy you want to short. That's the one you want to build a bear trade on. So we're not, I mean, sometimes I'm a bozo, but I'm not that dumb. I'm not, and maybe it's just I'm not that brave. Okay, I'll pick easier fights than this one. I ain't going bearish. Probably want to go bullish in light of, I don't know, history, the chart, the fundamentals. And see, here's the thing. You could say, well, Dick's Sporting Goods gone up so much. I mean, it's like twice as expensive as it was at the beginning of the year. Well, listen up. Value is not just a function of price, right? The proper way to look at it is to look at price versus earnings, or the PE ratio. And Matt, I can't remember if you said this during the show or pre-show, but if the price of a stock doubles, but the company's earnings double, it's not any more expensive. So in this case, if you go back, and I'm cherry picking here, but fourth quarter last year makes $2 a share, trading for $60. Okay. Now it made $5 a share, trading for more than double, 120, 130. Well, look, man, if you want to keep doubling earnings every year, you can keep doubling your stock price and you're not any more expensive from a valuation perspective.
To give you a number on that, Tyler, the PE ratio for Dick's is 10.81 right now. So even with this price appreciation, it's still a 10 PE ratio.
Which is incredible, by the way, right?
It's less than it was yesterday.
Mm-hmm.
Yeah, which is such a boss move, right?
It really is.
It's like, move over, kiddies. Like, let me show you how to do this. I'm going to move up 15%. By the way, like it jumps up $18. Now, confirm if I'm thinking about this right. If I'm going to pay everybody $5 a share in a special dividend, the moment I say that, is all else equal, is not my share price worth $5 more?
Yeah, they're delivering that right back to their investors. Mm-hmm.
Yeah. So it's like it jumps up $5 until the dividend date, then it goes back down $5. But all else equal, this should have gone up $5 just on the dividend announcement alone. Anyways, so all that said, I don't think it's overbought. I don't think it's extended. I think it's such a baller move, like I said, that they went up 15% and their PE ratio went down today. It's almost like, you schmucks, you should have taken this up 25%, right? Are you crazy? So it's got fundamental underpinnings, right? This is not a gap built on fluff. So the question you have to ask yourself is, do you think that it's going to completely crater? That these guys are up in the night and that it's going to completely fill the gap and then break the trend and go to a downtrend? I view that as the least likely scenario. I think the least likely scenario is this completely implodes, right? Because it just flies in the face of the sentiment today, and what everybody analyzed and agreed upon was this thing is doing really well. For them to flip sides, I highly doubt that happens. So my assumption, me playing chess, thinking a couple moves ahead, I'm thinking maybe it pauses a little bit. I hope it does, because it'll make it easier. I wouldn't mind this either pulls back a few days, gives me a nice little 2, 3, 4 bar retracement if we're lucky. Kind of treat it like a bull retracement, buy the dip and then it pops. I could see that as one potential scenario. I would prefer this not fill the entire gap. When you get a gap of this size, you really don't want it to fill the gap immediately, because it's kind of a sharp rejection of the euphoria. Given the size of the gap here, I prefer it not fill the entire thing. I'd still like it. I'd still be bullish if it did. I'd still buy the dip probably. But in light of the magnitude here, I don't know, 120 or so. Okay. But it doesn't have to play out that way. that would require supply to overwhelm demand. That's what causes prices to go down. This thing could just chill out and go sideways for a couple of days, right? Just give me a little base and then it breaks out and goes higher. We don't know which way it's going to play out. All I know is I'm interested in the next tradable pattern, right? And I could show you lots of examples of other, like Qualcomm had a nice up gap on earnings, and then a little bit of a pullback, something like that. So I struggle to pull the trigger. I'm like Tim, right? Tim earlier said tricky to build a trade today. I would concur with that, particularly because it's like right now it's kind of a doji. So like since the open, it went down, it went up, and it's back around the entry. It's like, I don't know. So I would prefer a couple more bars, which means if it rips higher tomorrow, I might miss it. Like I might miss it, unless I'm just really anxious to get some exposure. So I need a few bars is the point on the technical read. Now, what kind of strategy would I do? Look, in a situation like this, you take a look at the volatility. Options were expensive going into the event. And Tim, probably not expensive enough in hindsight. I don't know that this was pricing at a 15% move.
Correct.
So as high as the IV was, it probably wasn't high enough. But you're getting the volatility crush, right? So the news is out. The uncertainty is passed to a certain degree. So vol is coming back down to price in normal movement. Still could be high enough to consider selling options. My favorite two ideas here, okay? I don't think you need to fiddle with naked puts. It's a little too expensive for naked puts. Covered calls, and not my favorite here. I wouldn't do diagonals. I think I would either like this enough to do a bull call vertical or go the higher probability route and see if I can sell some out of the money bull puts, right? So I'm always partial to bull puts. If I could get down to like 110 here, Tim, sell a 110 put, buy a 105 put out to October, maybe 6 weeks out, I don't mind that trade. But again, it's tough for me to pull the trigger, and the analysis will change tomorrow and the next day as the price moves. Right.
And let's stay on this point for a minute, because both of those are vertical spreads. I mean, anybody out there who's done some study in the option market, trading in the options market, those are the typical verticals. Your bull call spread, the way that we construct them in our playbook, Tyler, a little bit more delta of a trade, right? At the money call option that you're going to buy, selling out of the money call option. Then your bull put is more of a theta trade. I don't think you can answer the question which one of those spreads you should play until the day you've got your entry point. But you know that it's going to be in that field of one of those two, because look at the volatility coming down here. I still think volatility's got room to come down. If you look at the last couple of earnings cycles, in March, volatility gapped down and then it faded lower for the next couple of weeks until it finally bottomed and started the cycle over again, right? Look at that beautiful volatility build into the earnings. That was a wonderful one. So it gave you that little rotating cycle. Same thing in June, volatility gapped down, it faded for a couple of weeks. So the last couple of times it's done it, it just depends on when you get that exact entry point on that next trigger as to whether or not I would lean bull call or bull put, but that's where I would be headed towards as well.
Well, it's a good point, right? Because maybe this pulls back for 4 days and vol just gets decimated and you're sitting at an IV rank of 0. I mean, look, if you got that good of a pullback into support with an IV of 0, then you're probably going to do the bull call, right? Versus if it just pulls back a little bit and the vol maybe stays high and you can get far enough out of the money, the bull put is still interesting.
Yep.
Yeah. So I 100% agree. Maybe that's good on Dix, unless you want me to build those out, but you kind of explained them.
No, I'm good. I'm good, because you're projecting out what you got to do next. This is a watch list idea. Now the trader has to continue to watch implied volatility and the chart. As soon as those things align, then you have your opportunity.
And here's the thing, like I know the 110, 105 bull puts around 50 cents for October because I looked at it earlier. But if this pulls back a few bars, Tim, I mean, if this pulls back enough, we might be talking about doing a 195 bull put. Like this could really sweeten the deal a little bit as the trade develops. But right now, you really can't go much further than 110 if this thing just rips higher tomorrow. So we'll see. But the point is, if this was not on your radar, it just grabbed you and shook you by the head and said, you have to now pay attention to me. All right. So the next one is Toll Brothers. This is a little bit different type of stock for 2 reasons. Number one, it's half the price at $63. So that immediately opens the door to other types of strategies. verticals are fair game with anything that's more expensive. You can do it on $1,000 stock. You give me around $60 and things like naked puts, covered calls, diagonal spreads become a possibility. I'll get to that in a second. As far as the chart read goes, this was kind of an inverted head and shoulders pattern. Left shoulder, head, right shoulder. Failed the first attempt on the breakout, then came down, but succeeding on the second. And as we talked about, the sectors in fuego here. So I love the breakout. This is not making you chase near as much as DKS was, right? And so easier for me to build a trade and pull the trigger right now on Toll Brothers than it is on Dick's Sporting Goods, right? Because even though this is up 4 bars in a row, it's not up that much, and you just got a fresh catalyst with the earnings announcement. So I'm less concerned with how much this has gone up. So strategy-wise, where's my head at? Well, the volatility is pretty low. So the IB rank, 17th percentile. If you're in the lower quartile of the 1-year range, I'm usually leaning towards buying options in some capacity. And I kind of know that Toll Brothers isn't a huge mover. So I already know its options in general aren't all that expensive. So I'm sure you could build a bull put or a naked put if you wanted to. It just doesn't excite me that much, right? So I kind of prefer either a bull call vertical if I want to go more directional, or maybe a bull call diagonal, which is kind of like a poor boys cover call. Now, I also know that Toll Brother options don't have as many strike prices in the normal monthly cycle. So honestly, I'm going to just have to see what can I build? What can I build? Okay. So if I was trying to do a poor boys cover call or a diagonal, normally I want to buy out a couple of months and sell short-term options against it. If I go to December, I would be okay buying the 60 strike. That's about a 65 delta. I'd rather not buy the 77 delta because I don't want to pay $1,000. It's too expensive. So I'm going to buy the 60, pay $7, and then selling an option against it. I'm actually going to start with October. So I look at October and I say, is there an out of the money option that makes sense to sell? Well, normally on a covered call, we sell around a 30 to 40 delta, slightly out of the money. 45 delta is a little too high for me. 23 delta is a little too low. I kind of wish I had something in between 65 and 70. This is the one instance where I'll entertain looking at a weekly option and see if I can find the right delta. But it's got to have good liquidity. So I'm just going to look at the weekly that's closest to the monthly I was using. And honestly, when I look at the open interest, I'm like, I don't know, man. I'm not in love with the open interest. I'm a big stickler on liquidity. Okay. And so I think I got to stick with selling October if I'm going to build this. And I probably sell the 23 delta, which is the 70 strike. You get $1. Overall cost is $6.30. I don't mind this trade structure. Okay, I'll pull up on the risk graph here for a second. So I don't mind this trade on Toll Brothers. But you could build a cheaper trade if you wanted to with a bull call vertical spread. So I'll get into that if you want me to, Tim. But ultimately for me on Toll Brothers, it would be between this and probably an October, probably 65-70 bull call, unless they have a 62.50, which they don't. So yeah, the other option would just be this $5 wide bull call for $1.63. If I wanted to go a little bit more aggressive and or cheaper.
Well, the diagonal is an interesting call here. Back on the chart for a second, because you have a different implied volatility structure that's happened immediately. Dick's had the much more pure version. You could have taken a picture of Dick's volatility build into the volatility crush, and you could have put it in a textbook or a blog to use it as an example, right? Toll Brothers also had a volatility build and a crush, but now the volatility crush has brought it back down to more historic levels. I wouldn't say there's a lot more room to fade here, maybe a little bit more room to fade. So staying on the diagonal side is an interesting one. The only problem I have with December, October is knowing how that's going to work. It's going to be just as balanced as a Vega trade as a Theta trade, right? So you are really playing the volatility as well as theta there. I don't mind the concept. $6 leaves you with positive theta if it has upward movement. It's kind of a simulated covered call almost a little bit there, Tyler, because you're going deeper in the money. There's some interesting things you could do there. Are the technicals ready for you for an entry point on that sometime like soon? I mean, you're much faster or quicker to a path to entry on this than Dick's. Is that where your head's at?
Yeah, I would have bought it today.
Yeah. Gotcha.
Because think about it. If you didn't get in today on the breakout and it goes up again tomorrow, you're certainly not going to get in tomorrow.
Mm-hmm.
Right? I mean, if you think you're late today, then you really think you're late tomorrow if it's an update, right? So if you're not getting in today, then essentially what you're saying is I'm waiting for the next pattern. You either pull back or pause and give me another breakout, which is it just broke out today.
Mm-hmm.
Or you pull back. I think so. You either like it enough to pull the trigger today, or you're probably waiting a few days to see if there's some kind of secondary setup that develops.
Can you do one thing for me, just analyzing this one? Then we're at the end of the segment. I just want to look at one thing though. If you can, go to the Analyze tab on that diagonal on Toll Brothers.
Yep.
Build me one with the December 60 and the September 65 instead of. I know it's a very tight delta. I just want to look at the comparison on the risk graph. Yeah, I don't like that because then if it becomes too bullish, and this was a very strong report, you then have a break even to the upside instead of profitability to the upside. That's why that delta thing you were looking at, you were instinctively looking for a little lower delta to avoid the problem on the right side of that risk graph. Is that where?
Yeah, and that's one of the reasons why Toll Brothers are a little bit trickier to trade. If we were on Apple or SPY or something that has strikes in $1 increments, you can structure it however you want. The issue with Toll Brothers is that you have the 65 strike or you have the 70 strike, and $5 is a pretty big move for Toll Brothers. So it's like you either sell like an almost at the money call with a super high delta, or you're selling a pretty far out of the money call. Between the two, Tim, gun to the head, you got to go with the lower delta call because the trade structure, the risk graph, the profit zone just fits your bias better, right?
Because it's got a bullish bias. Yeah, I got you. I'm with you. Matt, come back in here if you can. Thoughts on the discussion here in Jedi Options with Tyler?
Oh, I just thoroughly enjoy the conversation every single week that you guys have on Jedi Options. So once again, as I usually say, just thank you for that. And if Toll Brothers, and the second thing I'd like to say is if Toll Brothers post earnings has ran too much, remember, it's not just Toll Brothers alone in this sector. The sector looks pretty decent as well. There's other potential trades. You got Lennar that's hovering right underneath the 110 breakout channel. Pulte Group is looking at a potential reversal as well. And DH Horton looks like a trigger above its resistance pivot as well. So Toll Brothers could be front running something that's happening in the sector. So if Toll Brothers has ran too much post earnings and dealing with some of that volatility, there's other potential trades here as well, because these home builders love to kind of move together.
Mm-hmm. Absolutely. Great point on those as well. All right, Tyler, that's it for Jedi Options. Let's go back on the S&P and start moving into the back end of our show. Final thoughts, Ty?
I got Team Phoenix Trading Lab here in about an hour and a half. Today, we're learning about how to find trades, specifically credit spreads. So we've been having tons of fun talking about lots of stuff. I feel like the longer the lab goes on, the more there is to talk about. You'd think you'd be checking crap off your list, but there's just always lots of new concepts. But today, giving you some insight on how I find trades, and it's going to be fun.
Team Phoenix, 3 p.m. Eastern time every Wednesday. If you're a member of Team Phoenix, looking forward to that. If not, you can always join the Trading Labs with a 15-day trial right in the store tab on tackletrading.com and come and see what they're doing in those labs. Matt, final thought from you.
Yeah, tomorrow morning, you do get the preliminary GDP report. That is the second in a series of 3 GDP reports, so shouldn't see too many fireworks there, especially with the all-important Jackson Hole Symposium, which is now a virtual symposium this year. I don't even know if anybody's in Jackson Hole, quite frankly, but that does start tomorrow, and the speeches run through, I believe, Saturday.
Through Saturday. I'm going to be watching the PAL one, obviously. I don't know how much other I'll tune into myself. I'll wait for you to do the recap for
thanks.
me. Yeah, appreciate that.
I will be paying attention to many of those speeches. Jackson Hole is not your typical Fed meeting. Jackson Hole is there's a lot of academic speeches that you see on monetary policy and fiscal policy. You see some new ideas emerge out of there as well. So Jackson Hole is more
Symposium.
academic. It is. And so it's a 3-day event. But the all important one is definitely going to be Chairman Powell's.
I agree. Looking forward to what he has to say, see if it updates the market. And my last thoughts, Salesforce earnings. We already had it a little bit earlier. I'll be glued to it after the bell, see what's going on. It's a stock I invest in. I've loved the reversal characteristics over the last several months, building, but they got to prove it, and they've got to show me what they're doing with their earnings report. They've had very mixed reactions to the earnings in the last couple of quarters, Matt. Some gap downs. You had the one gap up in May. We'll see how they do tonight. We'll be breaking this down tomorrow after the earnings comes out. Other than that, guys, tonight, Trade Masters, 7 Eastern. We go live every Wednesday. It's one of our favorite programs of the week. If you're a member of our YouTube channel, make sure you got that bell on. When we do go live, come and join us tonight with Coach Mark and 2 coaches going head-to-head, battling out over their picks. Wonderful show, guys. Appreciate the analysis. Appreciate the insight. Interesting market conditions we got. We're done for today. We'll be back tomorrow, same time, same station. Until then, have a wonderful rest of your Wednesday.